Hello and thank you for joining me for the June 2023 edition of our Greater Vancouver Market Update. As I'm sure you've heard before, our goal with these videos is to bring you unspun, unbiased, and impartial analysis of the Greater Vancouver housing market. If you find this information useful, mildly entertaining, or if you can even get to that like button before the skip option shows up, please do so. Your support is greatly appreciated. All right, as we continue to roll through the spring market, much of the data coming in continues to defy expectations, not only of our federal government, but even our often overly bullish friends at the local real estate board. To break it all down, let's take a closer look at the numbers. As we always do, let's start with our sales figures, which registered at 3,411 transactions, which represents a 24% increase over the month of April. And if you've been following along with these videos on a monthly basis, the fact that the market continues to get stronger should not come as any big surprise. Things have been trending upwards since around the back half of February, and we've seen more and more activity and momentum every month. And as I've also mentioned several times, spring is the busiest time of year and May represents the epicenter of that activity. What is interesting, however, is that those 3,411 transactions are now basically at par with where we would expect sales numbers to be at this time of year, coming in at just 1.4% below the 10-year average for May. It's been 13 months since sales figures have come this close to being even or above the 10-year average. And on a year-over-year basis, the May figures are 15.7% higher than what we experienced last year. So this is a bit of a turning point also, because up until this month, year-over-year sales figures were down in the double digits. For many months, in fact, those numbers were flirting with the 50% mark. But again, it's important to understand that at this time last year, the market was cooling. Sales were falling. So far this year, we've seen a rebound in the market and sales have been trending upwards. So those two trajectories, one going down, one going up, they've now crossed paths, and we should see sales figures well above last year's levels for the remainder of the year if things continue the way they are. Next, let's take a look at the elephant in the room. Inventory. Although total listings for the month came in at 9,293, this is less than a 6% increase from the previous month, not what you would expect to see in the height of spring. So as demand, sales, continues to rip forward, listings do not. And with the increase in sales absolutely dwarfing the minimal increase in listings, our months of inventory drops once again, this time to 2.6 MOI and well into the depths of seller's market territory. Remember, anything under 4 months of inventory is a seller's market. At the end of the day, this is a game of supply and demand. So if sales, which is demand, is eating up supply at such a drastic pace, it means more and more people are competing for fewer and fewer homes. And when that happens, the folks that can pay more will pay more, because at the end of the day, we're dealing with the basic human need of shelter. And when that happens, prices will rise. And when that's this drastic, prices will rise at a very fast rate, which is exactly what's happening. As a result, the HPI price index has risen for a 4th consecutive month, despite our board claiming that it's been now 6 months of price increases. It hasn't. And it's now registered at 1.18 million. This is a 1.5% increase month over month, a 6% increase year to date, but still 5.5% lower than what we saw at this time last year. And just to help you with a visual of what's been going on with prices, here's what the HPI graph looks like as of June 1st, 2023. You can clearly see what all the hype has been about since the start of the year. But graphs and numbers are just that, and they're often a lagging indicator of what's actually happening out there from a boots on the ground perspective. So oftentimes in this portion of the update, I share stories with you from the field that might be a little bit contrary to what we're seeing in the stats, or perhaps something you wouldn't expect to hear based on the narratives you see in the media, which, let's face it, are regurgitated headlines from real estate boards that have a vested interest in pumping up consumer confidence. But this month, I can honestly report, just like the numbers suggest, the market has been super hot. And it's not because sales are way above seasonal averages. They're not. As I covered off the top of this update, they're actually still just slightly below the 10-year average. But it's that imbalance between supply and demand that's creating this firestorm. Anytime you're sitting at 2.6 months of inventory, you're going to see a certain level of frantic activity. What does that look like? Well, multiple offers. Properties selling well above asking price, and more importantly, well above recent comparables. We've seen all of this lately. And let's not sugarcoat it. No one really expected this back in January. Not me, not people a lot smarter than me, and not even our representative body, the Real Estate Board of Greater Vancouver. Andrew Liss, the board's Director of Economics and Data Analytics, was quoted in this month's press release as saying, "Back in January, few people would have predicted prices to be up as much as they are, ourselves included. Our forecast projected prices to be up modestly in 2023 by about 2% at year end. Instead, Metro Vancouver home prices are already up about 6% or more across all home types at the midway point of the year." End quote. Let's keep in mind that this is an organization whose main objective is to always bring to the attention of the public the most positive narrative about the real estate market, as ultimately it wants a vibrant economic ecosystem for its members to thrive in. And look, there's nothing wrong with that. They're not lying. They're simply trying to instill consumer confidence. If anyone watching this is under the impression that other major industries don't engage in this sort of PR exercise or lobbying, you're completely fooling yourself. This is just a byproduct of capitalism at the end of the day, and it's why it's important to seek out other independent opinions and sources. But even our board's most rosy outcome was a 2% increase in prices over the span of the entire year. And our local real estate board aren't the only ones who are baffled by what's happening. Last week, on June 7th, the Bank of Canada once again raised interest rates by another 25 basis points, bringing their overnight rate to 4.7%. This is the highest we've seen rates in 22 years. If you recall, back on January 25th, the Bank of Canada Governor Tiff Macklem announced that he was raising interest rates for the 8th consecutive time, which was the fastest rate hike in history, but he also made this public statement. Quote, "With today's modest increase, we expect to pause rate hikes while we assess the impacts of the substantial monetary policy tightening already undertaken. To be clear, this is a conditional pause. It is conditional on economic developments evolving broadly in line with our outlook. If we need to do more to get inflation to the 2% target, we will." End quote. Well, you can't accuse the man of not sticking to his word. And for the most part, things were looking promising up until about a month ago. Stats released in May showed that inflation was on the rise once again, albeit very slightly, up from 4.3% to 4.4%. The labor market basically unchanged, with employment only down 0.1%. And housing, well, we already talked about that, up 6% year to date. Officials at the Bank of Canada are now quoted on the record as saying that they're shocked by the data that they've been seeing, which has resulted in the latest interest rate hike. On top of that, the messaging that we're getting right now suggests that they're not done quite yet. So what's next? Most economists predict that another interest rate increase will happen before the end of the year, maybe two. What effect will that have in the housing market? Well, it's really tough to say because so far their efforts have not moved the needle. All right, that's it for me for this month. Please let me know what you think in the comment section below, and I'll see you right back here in about a month's time. Thanks for watching, everyone. Bye-bye for now.